Hi, today I'm going to review a company in India called Innovators Facade Systems Limited. Innovators Facade Systems make aluminum facades for high-rise building. If you can see the image in that you can easily see the facade with the glass on it. So the picture itself says what the company manufactures and how the company installs them. As an overview, it was founded by the founder called Radheshyam Sharma in June 1999. At that time, the whole industry was at nascent stage. There was not much high-rise building in India, so he was mainly concentrating on Mumbai, which was the financial capital of India, with many high-rises. So, in March 2007, he has expanded his operations towards North India. In 2016, Innovators has expanded towards South India. 2018 May, they have listed on Bombay Stock Exchange on SME platform. And in 2018-2019, they expanded the Vada factory at Thane. They automated it. In 2019-2020, they have established two new business verticals. One is cleantech and another one is Vinotech. In 20 years, they have executed around 280 projects, and they also made facades for 13 airports in India. Currently, their main projects is around Mumbai and NCR region, but they have projects all over in India. These are main, important projects done by them. One is Lodha World Tower, which is the India's highest, tallest building, and Bombay Airport Domestic Terminal, Reliance Twin Tower, and their client list actually includes big names like Reliance, Lodha, Cipla, Infosys, and so on. And they works with partners like Saint Globe and Dow Chemicals, all good names. Now we are going towards the business outline. Uh, if you ask me what the business they do, they design the facade system or the exterior of any building. So in that they would be designing the how the exterior should be built through major softwares, designing softwares. And once they have finalized with the design, they would manufacture the facade system at their factory at Wada, which is 125,000 square feet factory. And once they have built a prefabricated facade system from their factory, they would install at the site. So in 2019, when they got the IPO proceeds, they have used it for expansion of the facility. What's important in order to expand the facility, because if they want to get more order books, they need to increase the capacity in order to book more orders. So, in simple terms, we can say them as people who build exteriors of India's skyscrapers. They have, if they have single projects, which is something like Lodha World Tower and so on, the single project can cross 1,000 crores. So the margins are so very high in those projects, which are remarkable. Uh, it's around 17 to 18 percentage EBITDA margins in skyscrapers like Lodha or Reliance Twin Tower and so on. And they would be getting around 13 to 14 percentage EBITDA margins in other projects. In 2019, they had formed two business verticals. One is clean tech, in which they would be making specialized ultra clean and sterilized rooms for pharma companies. And another one is Vinotech, where they would be making high performance glass windows for resorts and luxury apartments, like uh, uh, like we would be seeing in movies where the facade system is highly luxurious. If you analyze the industry, Indian facade industry is worth around 15,000 crore, and it is growing 20% annually according to NRO report. Currently, the industry is getting more competitive, and stakeholders are increasingly demanding high specification and compliances regarding facade and fenestration. So they are also requesting IS code development in the industry. So majority of the players in facade and fenestration industry are in unorganized sector, and if you see, Innovators Facade System is the only entity listed in the stock exchange. They have a subsidiary called Innovators Engineering Works Private Limited. And they were listed in May 2018 at BSE, Bombay Stock Exchange, at the SME platform. From the IPO payout they got at 2018, they used around 40 crores, out of which 10 crores for factory modernization, 20 crore for working capital, and 10 crore for general corporate purpose. Uh, they got a recent work order 2 weeks back from Milestone Buildcon Private Limited for an order book of 26 crores. They have no share pledge of the promoters, which is a good thing. And promoters hold the majority of the shareholding. They holds around 60 percentage. So currently they have also increased their shareholding from 61 percentage in June 2018 to 63 percentage in December 2020. So which is a good thing. And foreign institutional investors and domestic institutional investors had stake in the company, but they have reduced in December 2020, which is not a good thing. uh, of the promoters, Radheshyam Sharma holds around 12 percentage stake in the company, who is the founder, and Raman Sharma, who is the CEO, holds around 10 percentage in the company. And two superstar investors, Vijay KD and Madhusudan and Muralidhar Kela, holds a stake in the company. Vijay Kedia holds around 10%, which is remarkably high. Now we are going on to financial evaluation, where I would be concentrating on how the company performing financially. The market capitalization of the company is at 82.4 crores. So we can classify the company as ultra small cap. The current price of the stock is at 43.7, which is less than the book value at 53.6. So we can classify the stock as undervalued stock. And price to book value also says the same thing at 0.82. It went as low as 13.2 in March, and as high as 50.8 rupees in recently. So stock price to earning ratio is 10.6, which is reasonable. ROCE and ROE at around 8%, is also decent. and face value at 10 rupees. So they have option to split the shares in future. And last 2020 financial year, they had sales of around 141 crores with an operating margin of 10 percentage, and they had a profit of 7 crores, which is okay. And last quarter they had sales of 28 crores with a profit of 2 crores, which is good. And in 3 years they had a sales growth of 12 percentage with a profit growing at 160 percentage, which is high, and it's good. So now I'm going on to return ratios and indicators through which I would be saying how the company is performing financially, like how much profit they make, how much revenue they make, uh, those kinds of things. So these financial indicators I will be using. The total revenue has been steadily increasing from March 2013 to March 2019, and from 2017 to 2018 there is a remarkable jump in the total revenue. That might be post IPO. So that's that's before IPO. So we can expect that company was performing from that moment itself. And the revenues have slightly gone down in March 2020 financial year. The net profits has been almost steady, or you can say like it was constant, going around more than 2% uh, from 2013. But in 2016 and 2017, the net profit has decreased. It might be because of the debt position company had. So might be some interest, large interest payment and so on might have been affected. And in 2018, 2019, company performed relatively well. And in March 2020, actually, the net profit has actually gone to negative. We'd see what happened in March 2020 in next slide. So from the last slide, in March 2020, when you see uh, the sales growth has actually decreased 10 percentage, but it's relatively small. But if you see in other income, there has been minus 15 crores has gone in other income, which made negative profits for the company. We we don't know what happened in other income. Other income is mainly related to the income coming from the interest or rent or something like that. So how the company had negative other income, we really don't know. And company has been performing very well. And operating margin also has been constant over the years, around something more than 10 percentage at least. So it's a good sign. So in March 2018 and 2019 they had a good EPS. It decreased in 2020. ROE as such, they had good ROE uh, starting from 2013, but decreased in 2016 2017. As I said, the debt issue might have been affected them. And 2020, as I said in previous slides, uh, other income has actually affected return on equity. So Return on assets has been almost steady, and it increased. It actually jumped double in 2018 financial year. It went negative into the 2020. So, mm, same thing what I have said in previous slide. Return on assets also remaining same. What I see in return on capital employed, it's remarkable, and it's remarkable because return on capital employed is important because company actually is capital intensive. They have a huge working capital requirement, so it gives you an idea that company is actually performing very well in managing the cash or preserving the cash and cost cutting and so on. So as per return on capital employed, the company is performing remarkably well. So it has been steady as well. EPS has been constant, and it decreased in 2016, 2017, and 2020 it went negative. The reasons were same as I said in previous slides. Now we are going on to solvency ratio and debt position. It's all about the risky part with this company. How much debt they have, what is their interest coverage ratio, what's their debt equity ratio, and so on. So if you consider long-term debt to equity ratio, in March 2013 they had a debt to equity ratio of 1.99, which is very very high. So we can see that company has remarkably reduced their debt to equity ratio. Their debt from 2013 to 2020, it's only 0.13 in March 2020, which relatively says that company is debt free. And in March 2013, uh, if you see the debt to equity ratio 1 is to 1 means that for 1 percentage of debt you have 1 percentage of equity. So uh, if they have 1.99 debt to equity ratio means they have 1.99 percentage of debt and 0 point something as equity. So you understand how the company actually managed to reduce their debt. The interest coverage ratio also slowly improving. It actually went down in March 2016 2017, where it went down 1.50. So anything below 1.50 is gives you a caution. So company their own has actually managed to coverage interest I mean their interest coverage ratio has been better, so it means that the company actually managed their debt from their onwards. So company has been doing decently well. I have included debtor days in this share analysis just because the company is actually into working capital intensive. So previously they have debtor days in March 2017 and so on. They have debtor days of 136. From there they have been steadily decreasing debtor days, and right now they have debtor days of 93 days. Debtor days is nothing but the money collected from the your clients. So if it the more debtor days means the more risky is companies. So company has managed to reduce the debtor days, which means that company becoming less risky. And in debt position, previously also I have said company works in working capital intensive sector, so that's a risk position. And there is also risk associated with real estate, because anytime the project can be stalled because of many issues ranging from environmental problems to legal hurdles. So the payment issue can affect Innovators Facade system as well. The as far as liquidity position, company is very well placed with minimal debt repayment obligations, and they have long-term debt of 23.75 crores and short-term bank guarantees of 49.75 crores, which is mainly used for working capital requirements. So altogether they have debt of 73.50 crores, and they have reserves and surplus of around 82 crores, including IPO payout of 61 crores. So it means that company is actually debt free. So as far as debt position is concerned, Innovators is better placed. Now we are moving on to valuation ratios, where I would be discussing uh, the how the share of the company is valued. Is it undervalued or overvalued? Whether as an investor, whether you can invest into the share or not. So I would be giving ideas like book value per share, price to earning per share, price to book value per share. So as far as book value per share, it has been steadily increasing, which is a good thing. So over the years, the book value has been increased to 67.51 to the rupees per share in 2019. In 2020, it has slightly decreased, but still it is a remarkable improvement in the company. And price to book value, if you see in 2019, it had around 0.86. So in 2020, when the company went to the lowest point of its share price around 13 rupees, it went book price to book value went up to 0.32. The At that time the company was highly undervalued, so anybody who had bought the share would have made right investment. Right now it stands around 0.82, which is also very decent. So people can buy into it. So currently P ratio is at reasonable at 10.6. So it's trading at a price multiple of 10.6, and price to book value is at 0.82, which gives you an idea that the share is actually undervalued related to its book value, so it is investable. We are going to other important analysis like SWOT analysis, peer analysis. I would be also reviewing the price patterns and giving you my insights about the share Innovators Facade system. So, as a strength, the promoters has been increasing shareholding. It is a company with low debt, and there is no promoter pledge. So these are the important. As strength wise, these are good thing. And in weakness, all the return ratios are declining. Like ROC in the last 2 years, ROCE, ROE, ROA declining in past 2 years. And as financial Petrosky score is low. It's Petrosky score is nothing but a financial score giving you how financially strong is the company. So it has low Petrosky score, and annual net profits also was declining in last 2 years. And opportunities, it has a highest recovery from 52-week low. There is no threats as such, so I am going on to peer comparison. This comparison is not ideal because they should be actually compared with real estate players. Real estate players also not adequate because it is only one listed Facade system company in the share market. So I can compare with the NBCC, but which is into construction. So there is not much to say about in peer comparison. So I'm moving on to price patterns. When it was listed, it was listed around 71 rupees. From there, it gone down, and in March 20, it went up to 14.70, which was Corona lockdown and its effects. So from there, the price recovery has been remarkable, and right now it is trading around 42 rupees. So it's an ideal position. Now I am giving you my insights. Current market price of the share is at 42.75, which is very reasonable. It has a reasonable PE value at 10.6 and undervalued price to book value at 0.82. So it indicates that stock is investable and slightly undervalued. It's not heavily undervalued, slightly undervalued. So it's a good company, good management, only listed in company in 15,000 crore industry. So stock is at investable values. Now, as a disclaimer, make your own decision and have your own portfolio. Last, as viewers, have give me feedbacks about my video. Also comment whether you would be interested in this stock or not. Thank you.